Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, July 31st. And we're looking at the last couple of days of the SPY ETF's market profile here on Window Trader. And boy, oh boy, what a wild ride. Actually, I think it's pretty disgraceful how this market's been trading. They're trading the SPY and ES like a penny stock, all being led by the big tech stocks, just whipping them around. A lot of things to go over. So let's start with this. Let's make this a little smaller. So in the past 6 trading days, since this absolute flush out when all those longs got tired and gave it up, all we did in the last 6 days was trade between the lower distribution of that day, and today was the most we trade in the upper distribution, and that only happened in A&M. Other than that, we traded, when you look at this, we traded inside the double distribution a bunch of times. And then the last 2 days, you can't really see it now because I'm in 4 and 5 tick increments, but we had the trend day on the 29th. We had the trend day from the 30th. And look where we traded a good part today inside of those. Now, here's what's here's another big thing. And somebody pointed this out in my room, so kudos to them. A couple of people did, because I wouldn't have even realized it. The all-time close on the monthly in SPY was January of 321.73. Well, we just blew that away. We just closed at 326.52. So this is the highest closing price ever in the SPY and in the ES. Yes, we were higher than this by about $13, $14 on the intraday, but this is the highest monthly close. That's pretty positive. But here's what kind of ticks me off and how I see what a disgrace. We opened today with a gap, right? We pushed up yesterday, ended up having the trend day up. We opened with a gap only to have basically an open reverse drive down, close the gap, push down, never get back above yesterday's range. Right? We tried in D&E. I took a nice short against that. Flush out. Have a chance for a trend day down, not once, but twice. Only to take it all back and go out with a price probe to the upside? Are you kidding me? Are you kidding me? Now, I stayed out of trouble here. I had a good day. And some people in the room, and this is why my room is great. We have some great people in there. Look, we call the market awesome from the opening to J period. I was looking for an afternoon rally high. Obviously, that didn't happen. I stayed out of trouble, and I told the room. I said, once we get above B's high, everything's off for me. Now, I could have gotten long, but I didn't want to. I thought the price action was irrational. Now, there have been many days in the past where I would have shorted the crap out of this and gotten destroyed. Didn't happen. Stayed out of trouble. Actually, I made one nice short in L, actually, on 100 contracts. But once it started getting above B, I was like, that's it, game over, and let it do it at once. However, there were some people in the room that took longs and rode this all the way up. And they were given nice information throughout the afternoon in the trading room. So it's a great room that, it all works together. I'm one person. When I don't see something clearly for me, I get neutral, and I'm more than honest about it in my trading room. Well, this wasn't clear to me to say to get long. Or maybe I didn't want to get long. But regardless, no trade is a trade also, and I certainly stayed out of trouble. So we close at an all-time high in the monthly. We go out with a price probe after having higher value to start in a gap, only to fill it and rip down to value low from yesterday. We have 8 wide. We lowered the POC, and then we never get 9 wide. That's another nuance, though. We couldn't raise the POC. So for my money's worth, as of right now, even though we had closed at an all-time high on the monthly, this was just short covering and FOMO buying, mostly in tech stocks. It'll be interesting Monday. We now have a weekly high for today, and this is a monthly high, and it's a poor high, and we still have the huge gap above us. Momentum, FOMO is not going to fill that gap above us. I still don't believe it. I even told you today when we opened. I said when we open today, there's no way we're going to fill that gap, let alone get to it, unless we get more of a catalyst. and look what happened. Boom, and then just the irrational price. This is just price. Now, you can't ignore price, but this is just price going up. So I wouldn't be surprised if we open down here by POC on Monday, and I wouldn't be surprised if the FOMO buys continue on Monday, and we go and gap higher out of a weekly, possibly out of a monthly. I will tell you this. We had an inside week in SPY. That's going to be fantastic going forward. I just want to make sure before I say it, but I think we had an inside, yep. We have an inside week in the triple Qs, which is incredible. We don't have an inside week in the Russell. I thought we did. Russell took out last week's low and then rallied. Okay. So we have an inside week, though, in the two big ones, ES, SPY, and triple Qs. That's going to be some pretty powerful stuff when we come out of it. We're closing at the top of it. That doesn't necessarily mean we're going to get it, but the odds right now are pretty good. But that remains to be seen. Do we come out of it, we rip higher and fill that gap finally, or do we come out of it and fail out of an inside week and come back in? The week and the monthly high are fairly close together. Well, guess what? So are the two weekly lows here and here. There's a lot, and our destinations are far and wide apart. So I think when we do start moving, this market's going to rip. Now, true, it's the beginning of August, vacation time. The big earnings are winding down. Maybe this takes even longer to come out of the inside week. I don't know. I do know that even though I was wrong, I thought we'd get a big move to the 330 level. At some point, that 330 or even higher, obviously now, I'd say 335 now for the gap fill, or that 310 low will be in play. And we're going to get to these destinations in pretty violent fashion, I think, when it starts happening. All right, I know I've been talking a lot, but it's very interesting. Look, the reason I've been behind the screen for 10 years now, I was a market maker specialist for 25 years. I can tell you this, and I know I've said it before, but that's why maybe it kind of aggravates me when I see price do what it did today. If I gap the stock higher, let it down let it down in the first hour and a half the way it did. Number one, there'd be the CEO of the company would be coming through the phone. That's number one. Then if I kept it, if I kept it here all day, now we found two-sided trade, things are good. If I didn't let this stock go and do what it did in the last hour, L&M, and make a new high, the CEO's not going to complain, right? Because now he's not going to complain, or he's going to say, well, how in the world did you let it down here and we closed up here after we opened here? Well, that's a good valid point. And I'll tell you what, everybody who did two-sided trade down here, and if I had some big customers that were getting out of a long position, and then they finished, and then it ripped up here, they're not going to be happy. So it's amazing how price on an S&P 500 just rips. All right, let's get to my trades now. I had a good day, and now my mind is fried again, so I have to look about what I did. So I took a long in A period, and I'm trying to think where I did. Oh, yes. So even though we had an open reverse drive, I didn't think they'd fill the gap right away. So a couple of times I took longs, and I bought every trade today was expiration for today. I bought 324 calls, and they worked out. I did it, I think, a couple of times when I scaled in and it came out. I knew I wasn't looking for the opening, but they worked out nicely. Then in B period, I said, if we get into M's range and close the gap, odds are you will trade M's range. Well, that's exactly what happened. So I took a short at M's high, wrote it down, 327 puts. That worked out nice. But then when it continued to rip, and believe me, I didn't stay in short this whole time, not a shot. But when it did come down to around, now at the time, it's tough to tell here, but we got down, and the single prints, I took a long twice in B period, because we filled the singles from yesterday, but it was hanging around that level, and I just thought this was really more of an inventory adjustment from the market being long. So twice I scalped longs off of that. That worked out. Then in C period, I took a short when we came back up to around M's, before M's low. That one worked out. Those were the 324s. And then I took a 322 call again against poor structure. So the 15-minute bar open, we popped down. I did it versus poor structure. That worked. All right, let me see. D period. Again, ripped up, got up to M's high, took a beautiful put play there, the 326 puts, and made money on that when it came down. Now, G period. G period was an interesting play. It actually evolved over 3 time frames finally. So G period, I forgot where I took the initial long, but I did 20 calls, and I said, I don't think we're going to hold singles. We didn't have a hold them one earlier in the day. I said, I don't think we're going to hold them here. When we got down to value low and we started tapering off on volume, I bought 100 calls. I bought the 322 calls. Went up. Those made money. It came in again. I bought 50 of the same. So my initial 40 contracts, although I was out probably a good 30, 40 cents on them, when I started scalping those 100 call positions and 50 calls, it worked out. And then again, I did in H. We had singles, but we didn't take out G's low. I know they usually fill. Again, I started doing the same thing, buying 50 calls, went up, took them off, came back in, did the same thing. And then finally, in I period, when we finally got up to POC, took off the rest of the original 40, made money on all of them. That was by far my best trade of the day. It evolved over 3 time frames, and it worked out very well. Now, why was I going long when we were 1 time framing down? Exactly the reason I told you. Value was unchanged. I didn't think it was going to go lower. This is not right, this value. It's overlapping to lower, actually. We were tapering off with each new low. We failed at single prints, and I thought we'd get back up to POC. If we ever held single prints, that trade would have been put to bed. But it didn't, and it worked. Then in K period, I was looking for the afternoon rally high. So I took a short a bunch of times. Each time we made a new high, took it, and it came in a little bit. It worked out for me. I did not get hurt. I finally took off the balance. I lost small on the end of it, but the overall trade worked out. L period, same thing. I told you it went up. I bought a quick 100 of the 325 puts. I traded the K and L with all the 325 puts. Scalped a 100 put position for 10 cents. I did a couple of those, not of that size. That was the biggest of it. And then I realized, I was like, this is not going to work. The short's not going to work. I'm just going to get out and watch. That's what I did. It was my last trade of the day. And I just watched M period. So it was a good day. No doubt about it. Erratic price action. All right, so here we go on destinations. Upside, 326.63, which is a weekly high. Then we have 327.23, only 60 cents higher, which is now a monthly high. And then filling the gap at 332.58, a 535-point gap from February 24th. For the downside, A's high of 326.13 is the price probe. So we closed above it. This is right. This is where your price probe is. Then below that, we don't. Now this is where it gets wild. So now we have a price probe. What am I leaning on here? There's no price spike. There's no single prints. There's no 9 wide. Yeah, we're 8 wide, but I like 9 wide. I was thinking about using J as an afternoon pullback low, but I was like, forget that. So today's low of 321.33 is my next downside destination until we get more market-generated information. And then 319.64 weekly low, 319.25 weekly low. Now, do I expect this all to be taken back because we have no reference points? I don't. But I will tell you this. If we don't, basically we're going to have to gap higher. If we don't gap higher, we're going to most likely open in M's range. And you know the history of M, right? If we get accepted into M, especially below the price probe, you're most likely going to at least trade M's range. So I'm not going to use it as a destination or reference point, but M's low would be where I would be looking to trade if we don't gap higher on Monday. And then we see what happens at that point. Again, if you get below it, Or better yet, if we open below M's range, then that's going to be a level where I would look to short unless we get accepted back into it to travel it. If you don't get accepted back into it and we open below it, well, look, there's nothing down here. So Monday's going to be some wild price action, I can assure you. Even if it's slow, even if the volume, and speaking of volume, the volume today is only, it shows 83 million now. So between M period and after hours, we've done a lot. So it's above average. It wasn't very good prior to that. So again, I think it's just a combination of short covering and FOMO buying, especially in the tech stocks. Here's what I was looking for, and I know this video is long, and I apologize, but I think you guys like it. So hopefully it's worth it, especially since it's a weekly recap. When we came down, Jay did a real head fake. It looked like Jay was going to take out eyes high. And I said earlier I was looking for an afternoon rally high, but higher than here because it was too close to POC. Boy, did it get higher. But Jay got close to eyes high and then totally reversed. Now, I could have been long here, but I was looking for it to take out the day's low again and then come back in and get long and go back to POC. That was a hell of a head fake because they really took out some weak longs and smashed some shorts here as we made our move up. All right. I'll try to keep this to 20 minutes. We're at 16. Let's try it. I know it's long. Let's go to the charts. Monthly. Well, they should be throwing the confetti up in the air because we're one-time framing up 3 months. We close above last month's high by $3, and it's the highest monthly close ever in the SPY and ES. Right? Pretty damn good considering where we were 4 months ago. Weekly. And our next destination, obviously, is the all-time high. Weekly. One-time framing up for 4 weeks. Yes, it's an inside week, but we're still one-time framing up because we never took out the previous week's low. It's an inside week. You come out of an inside week, one way or the other, you go with it and you monitor it for continuation or lack of. Well, if we come out of it to the upside, we're going to get into that gap again. And then again, I still think we need the next time frame in there to close this gap, or we might see a failure out of an inside week to the upside, at least initially. If by some chance we come out of it to the downside, well, you know where my destinations are, 310, 312. So it will be interesting. We have wide references. And then on the daily, beautiful looking candle. But the bottom line is, it's still balanced, right? I'm making this a 6-day balance now, or 6. I'm using today's high as the high of it, and I'm using that weekly low as the low of it. But the bottom line is, it's balanced. We need to get acceptance above the monthly high now to get that gap, plain and simple. And then quickly, I want to show you the triple Qs because that's what's running this market, right? Plain and simple. So monthly, they're even healthier than the SPY because not only they one-time framing up 3 months, they've already made a new all-time high, and we're getting distance away from previous highs. Here's the interesting one, right? Markets don't go bull-bear. They go bull, balance, bull, balance, bull, balance. Well, we're in balance in the weekly. So, and it's an inside week. So if we take out this week's high to the upside, well, then we should get another all-time high in the NASDAQ. If, however, we come out of it to the downside, well, then we're going to test the bottom of the 4-week balance, which is 251.32. If you get acceptance below that, then we go bear and look for the 230s. So it's going to be so interesting going forward which way we come out of these inside weeks in both the SPY and the ES. We had a really good week in CamelbackTrading.org's trading room. It really is. I couldn't be happier. We're just under 150 members. Come check us out, CamelbackTrading.org. I'm looking to do a webinar again at some point in the month of August. I'll keep you all up on that. But come check us out. Again, it's $10 for members for the webinar. It's $20 for non-members when I do decide to do it. So come join us. I hope you had a great day and a great week. Enjoy the weekend, and we'll speak prior to the opening on Monday.